the deal that wouldn't stay the same size. A year ago, Nvidia and OpenAI announced a deal that could reshape the AI industry. Since then, the number attached to it has gone up, down, stalled entirely, and finally landed somewhere nobody predicted. Here's the real story. Nvidia CEO called the original OpenAI partnership the biggest AI infrastructure project in history, and has spent the year defending it against accusations of circular financing. Here's what Nvidia and OpenAI actually announced when this all began. Nvidia said it intended to invest up to $100 billion in OpenAI progressively as infrastructure came online. The plan called for deploying at least 10 gigawatts of Nvidia systems. That's enough power capacity to run more than 8 million American homes. Nvidia and OpenAI framed the deal as a letter of intent, with the first gigawatt of systems targeted for the second half of 2026 on Nvidia's Vera Rubin platform. Analysts estimated the arrangement could eventually generate as much as $500 billion in revenue for Nvidia over the life of the deal. On paper, this deal was supposed to solve a problem for each side of the table. Watch how wildly the reported size of this deal swung across just 12 months. In September 2025, the headline number was $100 billion. By February 2026, reports said that had shrunk to a $30 billion equity investment instead. In July, Nvidia was reportedly weighing a guarantee as large as $250 billion for a single data center. What actually got signed this August landed at $105 billion for a different structure entirely. Analysts flagged the risk in this deal on the very day it was announced. The action will clearly fuel circular concerns. If you only saw the headlines, you'd think this was for completely different deals. September 2025. The partnership is announced with enormous fanfare. December 2025. Nvidia's own CFO admits nothing is finalized yet. July 2026. Reports surfaced that Nvidia is weighing a guarantee more than double the original number. August 2026. The actual signed guarantee comes in $145 billion below what was reported just weeks earlier. What was promised and what was actually signed turn out to be two very different things. The original announcement was a non-binding letter of intent for direct investment tied to 10 gigawatts of chips. What was actually signed a year later is a $105 billion payment guarantee for one specific data center project. That's the final signed guarantee Nvidia committed to OpenAI's Ohio data center campus, disclosed in an SEC filing this month. This wasn't leaked or rumored. Nvidia disclosed the real number directly to regulators. Nvidia disclosed an aggregate payment obligation capped at $105 billion tied to the Ohio project. The guarantee helps SoftBank-backed developer SB Energy secure financing for the data center campus. It covers lease and power payments and backs the value of the infrastructure if OpenAI were to default. The data center at the center of this deal sits on unusual ground and needs its own power plant. OpenAI needs guaranteed compute to keep training frontier models, and Nvidia's financial backing helps it lock in supply and cheaper debt for its data centers. Nvidia sits at the center of nearly every major AI financing deal in 2026, supplying the chips and increasingly the capital that keeps its biggest customers spending. Nvidia can afford to make deals this size because of how much cash the company is generating. Nvidia's market capitalization has hovered around $5 trillion this year. The company has separately disclosed roughly $500 billion in chip bookings through 2026, not even counting the OpenAI deal. When Nvidia invests in OpenAI and OpenAI spends that money on Nvidia chips, the revenue on both sides can look real without any new outside money entering the system. Nvidia's defense is that its chips are fungible and can be redeployed elsewhere if any single customer stumbles, which is a fair point. But the sheer number of interlocking deals Nvidia, OpenAI, Oracle CoreWeave, SK, Hynix, Anthropic makes it genuinely hard to tell how much real external demand exists underneath all of it. Whether this ages like the dot-com bubble or like the early internet build-out probably depends on whether AI revenue actually catches up to the spending. Axios has tweeted on X the following. Nvidia shares tumbled after reports it's weighing a $250 billion guarantee for an OpenAI data center project. Market Watcher has tweeted on X the following. Every time this deal gets bigger, the stock drops, and every time it gets smaller, people call it a red flag too. Nobody can win here. The market's reaction says a lot. Investors aren't just watching whether the deal grows or shrinks, they're watching whether the underlying demand is real. We put the big question to our audience. 41% of viewers think AI revenue will eventually justify this level of spending. 59% think the industry is building a bubble that will eventually pop. Either way, Nvidia's next earnings report is where the market will be watching closest. This single deal is only one thread in a much bigger web of AI companies financing each other's growth. Nvidia's OpenAI deal is just one piece of a much larger pattern across the industry. Together, Nvidia's OpenAI and SK Group deals are now part of a roughly $750 billion circular financing debate. Nvidia has separately committed up to $10 billion to OpenAI rival Anthropic. Nvidia shares fell 4.5% in a single session when the $250 billion guarantee report first surfaced. Nvidia invests in OpenAI, which buys cloud computing from Oracle, which buys chips from Nvidia, which holds a stake in CoreWeave, which supplies infrastructure back to OpenAI. The data center campus sits on a decommissioned uranium enrichment site in Pike County, Ohio, on federal land. Its power is set to come from a newly pledged $33 billion natural gas plant funded as part of a separate Japan-linked energy deal. That's the guarantee Nvidia was reportedly weighing for this same project in July before the number was cut by more than half. As Nvidia's chief financial officer, she has spent much of the past year defending the company's web of AI deals against accusations of circular financing. Some investment advisors say this pattern of companies funding each other looks familiar. When the dot-com bubble burst in March 2000, the Nasdaq fell 77% and took 15 years to recover. Today's AI boom involves far larger sums moving between a smaller number of interconnected companies. Not every analyst thinks this ends in a crash. There's a healthy part and an unhealthy part. The OpenAI deal isn't Nvidia's only relationship raising circular financing questions. Nvidia has committed up to $10 billion to Anthropic, OpenAI's biggest rival. It has also deepened its financial ties with memory chip maker SK Hynix, and it's backing Safe Superintelligence, the startup founded by OpenAI co-founder Ilya Sutskever. That's roughly where Nvidia's market value has stood this year, built almost entirely on the promise that deals like this one will pay off.